everybody. I'm Suze Orman, and you are watching the Suze Orman Show. And I want to talk to you tonight about the Fed funds rate. Is it going to help you if you already have an adjustable rate mortgage and that mortgage is about to reset? Will it help the real estate problem out there for those people now that the feds are lowering the Fed funds rate? I don't think so. In fact, let me tell you why. Please listen very carefully. 3 years ago or so, when many of you got these adjustable rate mortgages, the Fed funds rate was at 1%. When the Fed funds rate was at 1%, this is how they set the interest rate. 1% plus 3 always equals what's known as the prime rate. So when the Fed funds rate was at 1, the prime rate was at 4. In adjustable rate mortgage, the interest rate on one is always 1, 2, or 3% above what the prime rate happens to be. Okay, you got a prime of 4 3 years ago. And if you had equity in the home or you had a good FICO score, maybe your first interest on an adjustable rate mortgage was 4.5%, 5%. Now we're about to readjust 3 years later. Here we are. Let's say the feds go all the way down to 4%. 4% Fed funds rate plus 3% brings you to 7% prime. 1, 2, or 3% above prime is what your mortgages readjust to. So it's possible that you're going to go from a 4.5% interest rate 3 years ago all the way up to an 8% interest rate now, maybe a 7% interest rate if they continue to go down. Is that going to help you that much? No, you're still having a large increase. So for those of you who have been in trouble, because why? You got an adjustable rate mortgage, it's about to reset or it has reset. Is the decrease of the Fed funds rate helping you really at all? Not really, because you're still having such a dramatic increase. So who does a Fed funds rate decrease help? Well, it helps big business. It helps all kinds of things when it comes to the credit. It helps the stock market, big investors. But that's not what this show is all about, is it? Ultimately, it might help you because it creates jobs. Who knows? It can do a lot of things like that. But this show is about everyday people just trying to make a living, getting by, things like that. So in a strange way, it hurts many of you as well. This is how. Let's say you're afraid right now to invest in the real estate market. Let's say you're even afraid right now to invest in the stock market. So what do? You just want to keep your money safe and sound, and you want to keep it in a savings account, a money market account, certificates of deposit, things like that. Well, when the Fed funds decrease the interest rates, guess what? The interest rate that you are paid on your savings accounts, on your money market accounts, on your CDs, they decrease as well. So for those of you who want to be safe and sound, you're making less and less money on your money all the time. And at a time when inflation, in my opinion, is going up. I don't care what everybody says about inflation. Look at the price of gasoline. Look at the price of your health insurance. Look at the price of the food that you are buying in the stores today. It's costing you more to live. You're making less on your money, safe money that is. That's not good. So here's the bottom line I want all of you to get. Nobody's going to save you. The feds aren't going to save you. The economy isn't going to save you. Only you can save yourself. And that is what this show is all about. What can I teach you? What can you learn from the callers so that you can take the actions that actually help you, that save you, so that nobody else has to do it, but you can do it yourself. Now, I want to go right to our next guest.